What is credit note? A credit note is a document issued by a seller to a buyer indicating that there is a decrease in liability or expense. It is typically raised to provide a discount, rebate, or adjust an undercharged amount in the original invoice. A credit note serves as a formal request to adjust the buyer's account by reducing the amount owed or increasing accounts payable. Similar to a debit note, a credit note accompanies the original invoice and provides specific details of the adjustment being made. So credit note, it means that when we raised any invoice on customer and due to certain errors, you can say due to certain issues, due to certain inaccuracy, if that invoice amount or what we raise to the customers is different and what's accepted, that's a different. If there is any discrepancy, then in related to the amount, then we have to raise the credit note for that. When we are doing the billing to the customers, we are doing debit to that customers. That respective customers account is going to debit to our revenue account credit. So it means that
सर एक बार फिर से बोलिए ना।
when we are raising invoice to the customer, our
हम्म।
accounting entry is that customer account is debit to revenue account credit. So we have debited to the customer stating that that much amount is going to receive from that customer. We done the sale for 100 rupees. We book the invoice in the systems. Then the entry for that is respective customer account is going to debit to our revenue account is credit. So we have debited the customers with that respective amount, assuming that the 100 rupees and 100 rupees. That's the entry is going to be there in the system. So we have debited to customers. Now, if the price is not as per what we agreed, might be we received the first discussions what we have initiated with the customer, and when the final negotiation is done, that price is reduced from 100 to 90, but we haven't received that discussions with us, and we raise the invoice for with 100 rupees. Customer mentioned that no, this invoice is incorrect. As per the final confirmations from our end is with 90 rupees of the price for that services and not the 100 rupees. So invoice is already processed, invoice is already raised. So what we are going to do is that we have to provide the credit note to the customers. Credit note, it means we are doing the credit to that customers. Instead of 100 rupees, the 10 rupees is the differential amount. So we are going to do the credit note. We are going to raise the credit note on that customer. And the entry for that is going to be revenue. So we are going to reduce the revenue. That's the revenue account is debit for 10 rupees to that respective customer account is credit for 10 rupees. So we are reducing the balance of that customers with differential amount. What we are giving the credit to him. So credit, it means we have to reduce that customer's balance and we have to give the benefit to him. Initially, we raised the invoice for 100 rupees. Actual agreed price is 90, but incorrectly we raised the invoice for 100 rupees. Now, we have to reduce that value to 90. So differential amount is 10. So we raise the credit note. Credit note, it means we are giving the credit to customers. And when we credit to customer, our receivable balance is going to reduce. Our receivable balance here is 100. And when we credit it to
Nine.
customer, our receivable balance is going to be 100 less this 10. 90 is going to be receivable from the customer. So that's the credit note. We have raised the credit note on customers. Sometime provide discount or rebate or adjust an undercharge amount in the original invoice or overcharge amount in the original invoice. Provide a discount says if sometimes we want to provide the discount to our customer, we agreed that if you are going to do the business with us for $1,000 or for the 1,000 rupees in quarter, we are going to give you the discount of 100 rupees. If you done the business with us for 1,000 rupees, then if our customer place some order with us, multiple orders, and that value is going to be more than 1,000 rupees, then we are going to give him the discount, one credit note for 100 rupees. So we have to raise the credit note on our customer. Then that's again is going to be that the respective discount. If we want to hit to P&L, then discount account is going to be there towards the P&L and to our customer account. Whenever we are going to give the credit note, it means we have to credit that customer, and whatever the reason for that credit note, we have to debit. If we are giving the discount, then the discount account is going to debit and credit is going to the customer. And that credit note, we have to adjust against the respective outstanding invoices from that customer.